Today I have with me Sonya Rocvil, who is the principal and founder of Bedrock Real Estate Investors, a privately owned real estate company specializing in the acquisition and asset management of multifamily apartments in the United States. Sonya has syndicated and operated multifamily units totaling 442 and has been an equity partner for multifamily investments for a total of 400 units. So combined, 822 units Sonya has been involved with. Bedrock Real Estate Investors' mission is to identify, acquire, and operate multifamily properties in markets where they see future economic growth and opportunities to improve the value of the asset. Their goal is to provide cash flow for investors and quality homes for residents. So there's that social impact. They invest alongside their partners in every asset. So they are in the risk with you. Sonya began her career as an auditor and later transitioned to finance of a Fortune 500 company. Her depth of knowledge in business analytics and strategic implementations that drive growth has made her successful in acquiring and operating multifamily properties. She is an adjunct instructor for the NYU School of Professional Studies and serves as treasurer of the Council of Urban Real Estate. She's also an active member of her local merchant association. She holds a master's of business administration from Baruch College, Zicklin School of Business, and a Bachelor of Science in Accounting from Rutgers University. She's a graduate of Project REAP, REAP, which is Real Estate Associate Program. She's a certified public accountant and licensed real estate agent in the state of New York. Welcome, Sonya.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
How did you get to New York and why do you stay?
Yeah, I am a lifelong New Yorker. I've been here for many years. I grew up in Queens and then moved to Brooklyn. What I really like, especially in the area where I am right now, is really the community of people that I'm around. I think that's that keeps me, and then also the convenience factor. I'm definitely one of those people who's probably a little bit spoiled by being close to so many things within such an easy reach. And I like the convenience of that.
Do you walk to a lot of things? That's one thing that drives me crazy about where I live. I have to drive everywhere I want to go. Do you walk to a lot of things?
Walking, especially in the city, within Brooklyn, sometimes it is taking the subway or mainly taking the subway. I don't take the bus a lot. But knowing that I can get into the subway, get in and out of the city really very quickly, depending on where it is. I really like that. I really like that a lot. And then also just having children now that are, a little bit, they're not babies anymore, so they can support themselves and walk, and I don't have to take a stroller up and down the subway stairs.
So we got people listening to this from everywhere. If you're listening only, go to the podcast, go to the YouTube channel so you can at least see what Sonya looks like. She doesn't look big and scary. So the reason I'm saying that is because I think a lot of people who don't live in New York think the subway is a scary place. I've actually been on the subway in New York. I was not afraid. I was really young too, and I was not afraid. And maybe it's because I was young, but I wasn't scared. Yeah. And you take your kids on the subway, so it's not the place that we see on the news, and most things aren't what we see on the news. The news shows us what they want us to see, but we won't go into that political thing. Talk about that a little bit, and we'll get into more about real estate.
Sure.
You guys hang in there.
Yeah, no, absolutely. The thing with the subway is I do have to say it's not the way it was exactly pre-pandemic. I think, later at night, I was easily and very comfortable taking the subway. I would say now I probably would try to avoid it quite honestly.
Okay.
But overall it's still very convenient. During the day I feel comfortable, and I just do the New Yorker thing. If it doesn't seem comfortable, move to the next car.
That should be our whole life. If it's not comfortable,
That is.
that's a t-shirt. I have a cousin a niece that's a t-shirt. Doesn't feel comfortable, take the next car.
I like it. I like it.
So Sonya, in the introduction, by the way, you guys, I met Sonya through a friend of mine, Jerome Myers, episode 27. If you want to hear what Jerome's a dream catcher and helps people catch his dreams, we both work with him. And Sonya has been working with him. Again, I work with him. But anyway, Jerome, episode 27, if you want to know more about him. You are doing real estate investing, but that's not how you were born. You came into your career as an accountant. Is that correct?
That's right. That's right. So I studied accounting undergrad and went the path of, going to what's now a Big Four firm, found, a firm that I liked. And then after, being there and after getting my license for 3 years, I thought, I don't see myself being a partner here. I don't want to be a partner. And so I just knew, I guess to our point earlier, you have to move to a new car. It's not comfortable anymore. So
do you know can you name that discomfort? Do you know what that was that made you realize?
Yeah, it was I was in audit, and audit is a great training ground. It gives you a lot of professional rigor. It gives you a level of understanding of reading financial statements in a way that most people cannot. It really helped solidify my language of learning the language of accounting and the language of financial statements. But it is also a very, and it maybe things could have changed, but it's also very demanding, because you could come in and at the moment's notice, oh, we need you to do an inventory in Iowa, now, so you need to leave. Or we need you to drive and take care of this or that. And so it was something that I knew longer term I didn't want to do. I didn't see myself doing.
Okay.
And but it was, like I said, it was a great training ground. And if I had to do it over again, I would. And I would just leave at the time that I left. I think it was a good time to leave.
And I think that's key, and same thing with me in medicine, is I did medical school, began my practice, and then realized that's not what I was going to do. But medicine has helped me get to where I am. So I wouldn't take it away. It's given me a lot of skills. It's paid me really well and got me to where I am today. So you can't always take those things back, but you can, when you're uncomfortable, like we said, move to a different car. It's uncomfortable sometimes, but to stay in that place sometimes becomes so painful. And I'm sure probably thinking about having kids and, I'm going to have to run to Iowa and my baby's at home. Yeah, that's not going to work for me so much. Probably had a lot to do with it. So sometimes we get into a thing and we're stuck in the thing and we can't even we can't see any other way to be. Sonya showing that sometimes you make that leap. How scary was that? How hard was it? And how long did it take? Was it, I realized one day I didn't want to do it and the next day you weren't doing it, or how did that go for you?
It's actually kind of funny you asked that question, because there was literally one day where I was just like, I'm not going to be happy doing this anymore. And then a recruiter called, and we'd get frequent recruiter calls, and he's like, are you looking to make a move? And I was like, yes, I am ready to make a move. And so it was just sometimes, that it was just the calling. It was just that right time.
Yeah.
And it worked out really well. And then I transitioned, and I moved to a financial services firm. I spent the majority of my career there doing various roles, and, gotten promoted and moved around. But a couple of things were happening also at the same time. So I started, looking around more, and there are buildings all over the place, like something you take for granted sometimes when you're in New York and constantly surrounded by these things. And it's like, wow, people own this. I want to find out more about about real estate. And, I really loved the way the brownstones looked. And, I started taking smaller class, like these like weekend classes to just like learn a little bit more. And then as I was, going through my career, I was again thinking, okay, where do I see myself now,
Mhm.
moving through the organization?
Okay.
Because there are just different paths and I wasn't sure, like, where am I going to see myself now? And then um the company had made some decisions to make changes to the organizational structure, and myself and my entire group, we were laid off.
Okay. Wow.
And that that was hard. It was definitely something like, wow, I'm not going to be here anymore.
Mhm.
But then I had to kind of flip the switch, because in any situation where something big changes, you do have to take that step back and think, is this happening to me or is this happening for me?
Good.
And so, flipping that switch and just saying, you know what, I've been looking at like doing real estate or trying to do something else. I wasn't sure what my next step was. This is actually okay. This is okay, even though it didn't feel so at the time.
Yeah. Oh,
It it's going to be okay. So then that's when I'm like, you know what? This is an opportunity. And my husband was very supportive, and so were my parents. This is the time to just kind of take that step. So then I started finding a lot of real estate groups, and that's how I was just like, let me just jump into this because I can right now. And so that's how I made that step out.
interesting. So did you grow up in a family of real estate investors, or were they go to job, go to work, go to school, get a job, work
Work, yeah,
until you retire? Okay, got it.
exactly. Yep.
Same as me, many of us that way. You'd made some moves. You went from this CPA audit job where it's like, this is not me, to the Fortune 500 company where you were doing more financial. And that's probably where you got your financial chops, really. And all these steps have led you to where you are and being able to analyze deals and that kind of thing. Mindset is huge, because you could have gone down that ugly, depressing rabbit hole when you got laid off of, now what am I going to do? How am I going to survive? What are we going to, the chatter. And you
Yeah.
probably had some and had to get yourself like, wait a minute now. I was already not thinking about being here forever. This is just my chance. They might have made me move sooner than I was going to, but this is the way it goes. So let's see how it goes. And you didn't drown. You're still standing. You're standing strong. And you founded your Bedrock Real Estate Investors Company, right?
Yes, I did.
How did
And
you go from, let's go. I know you want to, I want to dive right into Bedrock, but how did you go from, I lost my job, got laid off, family supportive, which is huge. Your parents, your husband, those are huge supports.
yeah.
And you were kind of thinking about real estate. Had you bought anything up to that point besides maybe your own home?
No, I had not. I had not. And so I joined. So the thing I did was, one of the groups that I joined was my local real estate investor association,
Okay.
the RIA.
Uh-huh.
And the founder for the RIA NYC, one of her primary, building blocks is you have to have a strategy. So she said to me, Sonya, like, what's your strategy going to be? Is it going to be fix and flips? Is it going to be single family? Is it going to be and I was just like, oh my gosh, I didn't even know that there were so many strategies to choose from. But with that, she would always bring in different people to talk about different paths.
Yes.
And the one that really resonated with me was a multifamily.
Okay.
I grew up in an apartment building. It just made sense to me. And I was having a hard time thinking about investing in like a single family place in New York, just because it's like higher,
Yeah.
higher prices.
Yeah.
So this group, they were based out in Long Island at the time. The group itself doesn't exist anymore, but they were investing in multifamily outside of New York. And a light bulb went off. I was like, wow, how do you do that? And I found that path to be really interesting, because there, you have more options
Yep.
when you're not limited to your location.
Yep.
And And that was something that was very enlightening to me.
Yes. Yes. One of my mentors, live where you want to live, invest where the numbers make sense. I used to live in California, the numbers for cash flow. So you have your strategy and you have your investment philosophy. And my investment philosophy, I wanted cash flow, not just to invest for appreciation and hope that things go up, which they do over, just it does. But you got to sell it to realize that appreciation. Cash flow money is coming. So that's passive income. So that's my philosophy. The strategy that I have is social impact investing. The strategy that Sonya has is multifamily, and she's going to get into that a little bit more, but we do it. Social impact is both things. It can be a lot of things. And there she does invest and has that impact part in mind for the residents that she is serving, as well as the investors, which is key to most of these things. So you realized you could invest outside of New York. You decided that multifamily, define multifamily so everybody knows what we're talking about.
Okay, so when I'm talking about multifamily, I'm talking about it from the commercial. I'm talking about it like from a loan perspective, from a commercial perspective, and that's usually 5 or more units. That's when it's no longer, you can't get like a loan where you would for your house.
Gotcha.
So 4 units and below is it's still multiple dwelling, but I'm specifically talking about a commercial space. And then I started looking at deals that were 10 units, initially, but then my mentor, was trying to guide me otherwhere, like to go bigger than that.
Yeah. So mentors are huge, you guys. So if you're thinking about investing and you want to invest on your own, what we're talking about in the commercial space is 5 units above, the bank is looking at, or whoever you're borrowing from is looking at the income from the property. 4 and below, they're looking at your income. So that's that commercial space that you move into. And then we start out thinking, I'm going to do it myself. I can do it all, and I can't go too big because I can't do too big. And then you have people telling you, like, if you're going to do it, go big. Because going small is just as much work.
Oh my
You might as well get economies of scale. Is that what you got?
You just summarized everything so perfectly there, because that is so true. And I know it's hard to conceptualize this, but the work that you're doing for that 10 unit, like overall, like some of the base work that you have to do for that 10 unit is the same as like the 40 unit and the 200 unit. Like a lot of the steps are all the same. Yes, you're scaling up in dollars, but you're definitely doing a lot of the same work.
Yes.
And you might as well maximize your time.
Maximize, and zeros get scary, right? Adding zeros to the end of those numbers get scary, but then when you really think about it, they're just zeros. It's like it's a nothing, right?
Yeah.
Think about that, you guys. Now, so your background with numbers makes you really, really exciting to me, because I don't necessarily like doing the numbers. I'm like, this deal looks good. Sonya, tell me, do these numbers work? How do we make this work? And most of the time it's a how do we make it work, not does it work? And that's where you come in. Is that correct? Is that how you get the deals?
That's correct. I mean, so we take an approach. We're looking at, what happened in the past. We're looking at how are we going to operate the property, and then we do our analysis based on how we're looking to operate the property and our strategy for that property.
Got it. Do you buy properties with your own money in your own name, or are you putting groups together to buy these properties?
We're putting groups together. So we do what's called a syndication, where we're essentially pulling together people who want to invest in properties, and we are then using all of our collective funds to then buy the property, and then we operate it.
Thank you. Did you buy any not single family, but any multifamily in your own name before you did a syndication, or did you go
No.
right into syndication?
So I didn't go right into syndication. I actually invested in other people's deals first.
Perfect.
That's what helped me learn what are some of the things I need to do, or what are the things I need to look like, or how does it work with investor relations, or so I that was also a lot of learning too, investing in the deals, and you're learning, and then you're also making money passively as well. So that's how I really started, and then that's what gave me some credibility when I started speaking to brokers at that time, and other people in my circle who I wanted to encourage.
What made you go from that passive investor so you're an investor in a syndication, which is a limited partner. What made you want to go from that limited partner to the general partner or the sponsor of the deal?
I wanted to do something where I had a business or a business model, and something that was that I could directly drive and operate with myself or other people on my team. So that was the thing that was really exciting to me. And the fact that, like, one of my mentors said this, like, each apartment it's really its own little business, because it has its own set of revenues and expenses, and I love that idea of being able to manage the properties, and so or operate the properties, because we have property managers. So like that's what really compelled me to pursue that further.
Okay, you said something there that I want to bring out, is that she operates the property. She doesn't manage the property. So if you decide you want to be a general partner and raise funds and invest with other people, or you decide you want to buy a 200 unit apartment complex on your own, it doesn't mean you got to get the calls from the tenants to fix everything or to sign leases or whatever's. You get a manager to help you. So you can do that on your own, or you can do it as a sponsor or general partner, operating partner of a syndication. She's not getting those calls. She's managing the managers, which is sometimes even more challenging, but
sometimes
something that's got to get done. So talk about and I'm just going to just in general talk about the financial difference from being a passive investor in a syndication to being the sponsor of the syndication. And I know if you guys didn't listen to the introduction, Bedrock real estate investors invest alongside their investors. So they're not just taking your money and putting it into a deal and you're taking all the risk with that thing. They're investing alongside you. So talk about the difference in being that general partner and then being a passive investor also.
Right. So as a general partner, you have quite a bit of work to do. First, you have to find the deal. You have to grow and build your relationships. If you're not in the market, which I'm not in the market, I don't live in the market where I invest. You do have to go out there and find and meet people on the ground, because at the end of the day, you have to be on the ground. You have to have an on the ground presence. So it involves going out, making the broker relationships, seeing opportunities to connect with other owners for potential direct purchases directly from an owner. You have to then also, vet property management companies. Who's going to manage this property? Who is going to do the day-to-day when you're not there to handle it? How are you going to fund the property? You're going to need to build up and have relationships with lenders to look at various options so that you have the right strategy for your deal. So with that, you're doing all of that work over years, over periods of time to build relationships with people. And so with that, you are once you close a deal, only upon closing a deal, there is an acquisition fee that the sponsor usually earns from putting the deal together for that whole time that they've done that. So that's a big difference with being a passive investor versus the general partner. A lot of the upfront work that has to take place in order to get the deal to even bring it and package it in a way that it's appealing to investors.
Yeah, got it. In addition to that side of the work, you're also meeting investors and getting to know investors and having investors get to know you, because one big thing for me is I don't invest in something that I don't know the person that I'm investing with. So she talked about the deal side of putting that thing together, but there's also the side of getting to know you and getting to know other investors so that they will invest in that property and help bring that home for everybody.
Yeah.
Right.
That's true. That's true. And
It's
so
a lot of
that's
work. It really is.
it is. It is. And you really have to love it. You
You
have to
do.
love it to do it, with anything that you want to spend most of your time in, you really have to love
We don't always do that though, do we? There's this, I think this is one of those, you have to love building relationships in this business, truly. And that's one thing that I think being in medicine has helped. Being in medicine and yet short-term relationships. And I really, really love long-term relationships. I want to know you forever.
it.
And so this has helped me get to do that more. So that's, and the same thing with Sonya. She wants you to invest in her deal now. And then when that deal's over, invest in the next deal and invest in the next deal. So her goal is for everything to go really well. And I can tell you, she works really hard to make that happen. Does everything always go great, Sonya?
No, it doesn't. A lot of times you have to, you have to just be monitoring what's happening. What do I need to do differently? How do I need to make changes to fix whatever I feel is not going the right way? Sometimes you have to change and pivot your strategy.
Yeah.
All of these things, you still need to communicate with your investors to let them know what we're doing. So,
Making changes and communicating why those changes are happening with the investors. It's challenging and fun, just like you said. And I love it too. I mean, there's times when you're like, what the heck? But most of the time it's like, yes, yes, yes.
great.
And
Yeah.
getting to be so creative and figuring out how to fix something. Okay, this is going kind of sideways. How do we get it back on track?
Right.
And sometimes it is just something out of the box thinking to make something happen.
Problem solving.
Yes,
It's all about
yes, it's
problem
the
solving.
best thing. The best thing. So I talked about how you invested Bedrock Real Estate Investors has 400 units, and as a limited partner, those 400 units is what I got out of off your website. It might be more now. 442 as a limited partner. So you invest outside of New York. And I know that the South and Birmingham, I believe, is a place that you really like right now. Talk about why Birmingham. It's like people in the Midwest and people in California and probably people in New York are going, where the heck is Birmingham, number one? And why Birmingham?
Yeah. So the deals that we've done have been, one of the big things is looking at your market, what market. So if you're not going to invest where you live, where are you going to invest? And that opens up a wide array of everything is open to you. So one of the things we tried to narrow down, I want to be able to get to my investments quickly. So for me, geographically, the East Coast helps me accomplish that. I also want to be able to be in the states where there is a bit more, it's more landlord friendly and also business friendly. And that's just not something that also happens in New York. And, granted, there are landlords and owners that are not doing the right thing. But if you are doing the right thing, and for us, we want to provide clean, safe homes for people. You want to be in a place where you'll be able to collect rent for providing that service. Okay. And so that's what brought me to the South, and that's what brought me initially first to Atlanta, Georgia. Okay. Then Atlanta, still love it. Very competitive. Everybody else loves it now too, and so it's been very competitive market. And I started, branching out, just thinking and looking and talking to people really about other markets. And then once you start talking, you start doing more research. And I really liked what I was seeing in the Birmingham market. I hadn't looked at that market. It was new to me almost a year ago. And what I did was one of the things that I saw was that they were hosting the World Games, which they did in July of this year,
Okay.
2022.
What's the World Games?
The World Games is the Olympics for the games that are not in the Olympics yet. So
Okay.
so it's still hosting a world stage for, games that are trying to make their way into the Olympics, but they're not official sports yet, but they're still sports that people compete against all around the world.
I'm trying to think of a sport. Can you think of, because I'm thinking, like, isn't everything in the Olympics? What can you think?
Yeah, there are some other things, and I off the top of my
Blanking.
remember which ones it is right now, but there are a bunch of them, and it's really I didn't stay. I was there right before the Olympics started. I didn't get to go to the games, but one of the things that I saw was the investment that the city was making
Got it.
into itself.
Yes.
That's
Yes.
very important.
Yeah.
I like to see that there's an investment in infrastructure, and that's what the city did. They did an amazing job of transforming what many of us know as underpasses, which tend to be scary and dark places. They made them family parks with fantastic lighting, and it was just such a great work job that they did there.
Okay. So a market, you start looking at different places when you're not going to invest in your own backyard. You look for markets that are investing in themselves. So a city, and it's not just the city, you're looking at smaller parts than
Right.
just that city.
Yes,
This is why
exactly.
investing away from where you are is hard to do on your own unless you have somebody there. So if you already have somebody there, makes it a little easier. Otherwise, you're going there, like Sonya was just saying she did, and she met people there. She got the feel of the place to know that this was somewhere she wanted to invest. Are they investing in themselves? Are they bringing jobs here? And once you start bringing jobs somewhere, then lots of other things start happening. So big companies move in, and then smaller companies move in to support those big companies. So that's really huge and big thing to really look for when you're looking to do investments and things on your own, or when a sponsor is bringing something to you and you're like, why are you investing there? Why would you invest in Tulsa, Oklahoma? What's going on there? And if they need to build the case for you to see that investment is good.
That's
So
right.
you said Atlanta, and now you're in Birmingham, Alabama.
Yeah.
And doing quite a few different deals there. Because of the market. World Games, look up World Games, you guys. So somebody send me something and tell me what kind of games there are, sports are. They're not in the Olympics yet. I'll Google it myself. Okay, I'll get over that right now. So you have a partner there, you guys are doing deals there, things are going well, that's great. What other places are you looking at? Or are you looking at other places? Or are you concentrating just in the Southeast? You said because it's easy for you to get to.
Yeah, so I'm looking in the Southeast. I'm also that's primarily where I'm looking. So that's going to be also North Carolina. There are several markets there that I also like.
Yeah.
And so it's a balance, because you want to be to know a market well, you have to spend a lot of time.
Yeah.
But you don't want to only just be in one market. Just so that you have a little bit of balance and deal flow. And so
why else not be in just one market? Because we talk about one word that people use all the time in the stock market is diversify, and then it turns out you're not really that diversified when you're in the stock market. So in real estate, the diversification is different because you can diversify in different classes. You can do multifamily, you can do single family, you can do commercial, you can do a ton of different things.
Right.
And you can diversify geographically, because in general, while remember 2008, where the housing market went crazy, it didn't go as crazy everywhere. So if you had stuff in some place that went really, really crazy and dropped really low, Arizona really low, or Greensboro, North Carolina, where things really kind of hung out and just didn't, they dropped a little bit, but not a ton, you kind of even yourself out. Is that why you're talking about doing different locations?
Yeah, and also it's also about like deals that if you like, if you like have a particular strategy, and you may feel that, okay, I'm going to look for deals in this certain sub market within my current market, but if I'm not finding those deals right now, having that other market that you're looking at, so that you can continue to look at deals and continue to understand and deep dive into markets and see opportunities.
Got it. Got it. We've not talked about how you guys use your properties to have a social impact. How are you guys working that into your overall strategy?
Yeah, I think first and foremost is, we are buying deals they're typically market rate deals. So they're not affordable housing, purchases at this time. They are market rate, but they are more for workforce housing, which means, people who have more jobs that may be a bit more labor intensive, or teachers, or, nurses or nurses aides. So these are the types of jobs that can sometimes fit in that bracket.
Okay.
And so what tends to happen then is you have home prices that are kind of like a naturally occurring affordable housing. In other words, you're not going to be pricing the same amount as like a brand new property that opens, down across town. It's
Yeah.
going to be naturally at a lower amount. And
Right.
so, although, some of that strategy is to usually increase rents over time, we still want to focus on having, clean and a safe property for people to live in, making
Yep.
sure there's enough lighting, making sure that, people, like, again, just feel safe because this is their home. So.
Yes. Yes. So you may buy a property that from an owner who's had it for a very long time. They've kept it up. It's livable, but you bring it up a little bit higher and keep it in the affordable range for workforce housing. Yes.
Yeah.
Which is,
yeah.
Okay. And in the same, so that it's called value add. They're not gentrifying and moving people out. They're making it a better place. Rents do go up some. We're not pricing people out of the market. A lot of it is because of where you bought your property, but it is to provide safe housing for people who can afford to live in the property that you have. So if your strategy is workforce housing, your strategy is affordable housing, your strategy is low income housing, all of those things are strategies and ways to get cash flow and even appreciation. It's just the niche that you've chosen to be in.
Yeah.
So that's really amazing. Love it, love it, love it. Let's talk about, how do people reach you? So Sonya does a lot of deals. As you know, she's a syndicator. A lot of us, like I said, I would never want you to invest with Sonya or anybody if you didn't know them. So let's start getting to know Sonya. If you like what she's doing, if you like what you've heard, here's how you can get in touch with her.
Okay, so first you can always connect with me on LinkedIn, Sonya Rocvil, LinkedIn. You also feel free to go to my website as well, Bedrock REinvestors with an S.com.
Okay.
You can sign up for my newsletter. I try to send out information just about what I'm looking at, what I'm doing, and sharing that with people that are in my network. And then also you can connect with me on Facebook as well.
Perfect. And those are all, because I know nobody's sitting there with a pencil and a paper writing, or pen and paper writing down what she just said. It's going to be in the show notes. So when you're ready, go there. Listen, you guys, it's important to get on the list and to get into people's networks. So even if you don't want to invest with Sonya right now, I keep doing it, Sonya right now, get on her list so that she knows who you are. You can get to know her. And when something comes up, it makes it a lot easier to get into a deal. A lot of times you've got your investors that are there all the time. And every time you get a deal, they're investing again and it closes up and nobody else can get in. Get there so that she can get to know you, you can get to know her, and you may be able to get into her next deal. You listen to Money with Mission podcast because you want to change lives while having your own financial return. You want to make a difference. You are a philanthro investor. The company Philanthro Investors was founded to financially support companies and individuals of goodwill who are making a positive social impact on planet Earth. The vision of Philanthro Investors is a world in which every family can have the opportunity to live in their own happy home, in which every individual can have easy access to organic, natural food, where animals and humans can drink clean water and breathe clean air. A world in which lives are protected from structural damage through innovative construction plans and materials. A world without electrical structures, full of renewable energy. A world without illiteracy, where disease is a distant past. A world where artistic talents are developed, appreciated, and adequately rewarded. You can have true financial freedom with the knowledge, control, and high purpose of philanthro investing and achieve a true legacy. Learn more at moneywithmission.com. Click opportunities, then click philanthro investors.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.